Hey everybody, what's going on? Welcome to Market Mavericks. Hope everyone's doing well. Of course, we are back. Mike McGlone and Scott Melker here with me, and we got lots to talk about today, right? So, ETFs have launched, Scott. How did it go? Give us a rundown.
It seems to be going exceptionally well. Looks on track to be likely the most successful ETF launch of all time. That could be true individually and obviously as a group. If you group the 11 together, they're clearly going to crush any single ETF launch that we've seen in the past. The most successful of all time was actually the Bitcoin futures ETF, which was 1.2 billion in inflows, I believe, in the first 48 hours. It's actually had really high volume. Last I saw, it was almost 4 billion in volume, but that doesn't necessarily mean inflows. So we have to wait until, I guess, the end of the day to really see how much of that is new money, how much of that is sort of horizontal trading, how much of that is conversions from other things. And a lot of it, of course, is actually GBTC selling, which I'm sure Mike will have quite a lot to talk about. But for the first time, now that GBTC is not a trust and has been converted over to an ETF, people are able to sort of sell and take profit there and take massive advantage of that once huge discount that was there. So I would say that it has wildly exceeded expectations from all the analysts that I've seen and all the numbers, and has caused the predictable volatility only to be trading with Bitcoin underlying at the exact same price. Right, we saw a big whipsaw up, whipsaw down, and right back.
Is there anything that's happened that surprised you, or is this kind of generally what you thought would happen?
This is generally what I would thought would happen, but if you show my screen, I think the big surprise today, at least to some of us, investment giant Vanguard blocks clients from buying Bitcoin ETFs. I don't know if you guys saw this, but people tried to go in and find it. They said spot Bitcoin ETFs will not be available for purchase on the Vanguard platform. Bill said the spokesperson said the reason behind this decision is that crypto-related products don't align with the asset manager's focus on asset classes that build blocks of a well-balanced long-term investment portfolio. They said it was too volatile, and they are completely full of, why? Because you can buy and trade GBTC, which has been more volatile with a 50% premium and discount. You can buy and sell BITO, the futures ETF. You can buy and sell Bitcoin miners, which trade at 2 or 3 times the volatility of Bitcoin. So there is something very, very fishy going on here. We're getting reports that Merrill Lynch is the same. So when you have some of the largest platforms on the planet don't allow people to buy who are aggressively trying, well, maybe you're not getting a true picture of the demand.
Yeah, very true. Mike, tell me about GBTC. What do you have on that?
Yeah, so let's let me show you. I can start there and just let me give you the first, and I'll start with GBTC. What I like to show right here, the discount's gone, and that's why I show you in white. I mean, when it was, as Scott mentioned, it was at pre-show, it was 50%, and now it's like 2, but it's going to be flat. It's an ETF now. The ETF in GBTC is it's now about 30 billion, and it's the GLD of the space, and GLD is almost 60 billion. And okay, so they're going to lose some assets, but at some point they might cut their fees. But to me, this was the trade for the ETFs. It's up like 400%. Should I show you in orange? The market's gone up from that low at the end of last year from, what was it, 7 or so, and now it's what, 40. And you want to add to that trade, you're supposed to say thank you very much. But can I run through a few charts real quick? I just want to show you the macro I'm looking at, and part of the reason I'm very much more bullish on gold and treasury bonds like TLT than I am Bitcoin. And here's just the facts. You look at 50-week moving averages, gold's already on it's breaking out. It's breaking out, and I point out on that same scale, gold's breaking out, it's trending higher. That's a NASDAQ, that's S&P 500. It's catching up. It's at highs, but it's just catching up. And there's Bitcoin. Yeah, it's catching up, but it's still got to get up to 69 to make the old high. So I look at it as, let's go with what's the momentum here, particularly if we get to a recession. And this, to me, is one of the key. That was the macro. Here's a little more micro. We still have that gap in the S&P 500 at 6. This is S&P E-minis. I went back to 2005. We've never had a gap that wide that wasn't recovered. So, okay, so maybe it won't. But the key thing I like to show you on this chart, I'm really concerned about, is you take Bitcoin divided by gold. Bitcoin, the world's most widely traded 24/7 risk asset divided by that store value. It's been leading the stock market higher for years. Now it's lagging. And I'm like, okay, well, that's not good. you know, it's everything is going up on beta, but now it's not. This beta measure gets heading higher. Is even with the launch today. That's why I'm looking at now. Okay, this could be an inflection point. So I'll just show you a few other charts. If you look at that same chart, look at GBTC divided by GLD. Now GBTC now is the GLD of 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 Bitcoin for now. Who knows if they're going to be able to steal 30 billion from them? But when we launched Bitcoin futures, we had put that good peak in. 2017. We launched Bitto, as Scott mentioned. That was 2021. We put in a good peak. And every time this thing peaked, stock market bottom afterwards, a couple of years later. Stock market bottom here, stock market bottom here. So here again, it's the same thing. Now, GBTC had the premium, but it was leading the world's measure of risk assets, S&P 500 up. And now it's lagging. And I'm like, okay, well, that's not good as we head towards recession. So I showed you this chart, and I can dig in some other macro there, but we can, let's just pivot and see where you want to go.
All right. So let me just throw out my chart here. I just want to show people something. So this was a trend line that I'd been watching for a while. I've been talking about the 48 to 50,000 level. And you can see again from the 2019 high right through the bull market, both lows, and we hit it and pierced it basically today. The other thing that I thought was interesting is, you know, for those of you that know your fibs or look at fibs, if we do a Fibonacci retrace from the all-time highs to the bear market lows, it's exactly a 618 here. So 618 was tagged today for the first time. We can zoom in and see it right there. So just kind of interesting. And I guess I would pose this question to both of you guys is like, is it possible that Bitcoin was the launch of these ETFs, the hype around this was the final move in risk on assets? You know, Mike, I know you've been talking about maybe the stock market pulling back this year or having a sell-off this year. Could this be the catalyst? Could this be the culmination, maybe is the better word?
So let's look back from the future. I think that's a high probability when we look at this from the end of the year, this period, we're going to say, okay, well, that was the bell ringing. Now, it's never that easy, but I look at it very simplistically. The pendulum swung way too hard and low, and the sentiment was way too negative at the end of 2022, swung really hard back the other way. Just a little swing back this year is what I expect. And I want to show you a few charts on that and the macro that's really kicking in from my standpoint, and cannot ignore the world's second largest economy. China is imploding in some ways. And this is what I show you is this: the Bloomberg commodity index is peaking. And one of those reasons is if you take U.S. imports from China and divide up imports from Mexico, they're collapsing. China is a big trader. There's a lot of money there. At least it's stuck in this. It's cannot get out. But big traders. And I want to point into some of the key things that are tilting my way for that. And that's just look at the isms. They're hovering on 50. That's manufacturing and services. I'm using the composite. It's just hovering on that 50 level, and I'm just looking at Bloomberg commodity index heading lower. I'm just using it versus 60-month moving average. That's part of the reason I'm bullish bonds, and we talked about TLT, is they are heading lower, and we've never had a bottom in these things when they're both going down until interest rates drop. Now, I wouldn't say never, so I was going back to 1998, but usually you have to have interest rates drop. So those are severe recessionary trends. And I look at stuff that in the macro, in my space, in commodities, it's already in a clear recessionary trajectory, clearly on a global basis. And you see that from crude oil. This is average price of crude oil dropping. Average price of gold is all-time high. That to me is the macro. And today we had, just as Anna Wong's view of the CPI number, it's just CPI is, I think, the key thing I want to point out is, okay, this is a bit of a higher than expected CPI. We can get back there later. But the key question I want to ask everybody is, as we tilt towards this, we're already in a soft landing. And we expect to go to recession without going to soft landing first. And that to me is what the trajectory is.
Gotcha. Scott, what are you thinking about, the potential that this could mark a top in equities with the hype, essentially the hype that created this risk on atmosphere?
I mean, I think anything is possible. I just want to see bears prove it to me, right? I've thought it's sort of the old ye old quote, markets can stay irrational longer than you can stay solvent. And I do think that the market is irrational, but I also want to stay solvent, right? So, as you know, my kind of hedge here is I just got that's a ETH chart, but I got long TLT. I haven't even looked at it. I literally checked it for the first time since the show last week today. So that's where I'm at with TLT as my, if the recession's coming, I should do quite fine hedge trade there, is that I really haven't even looked at it. I'm literally can bring it up right now. So we have the right chart on there. But yeah, it's at 96. I was in down here. I think that this does exceptionally well if things get worse, which is my base case. Otherwise, I, continue to dollar cost average into my equities portfolio as I always have, and into Bitcoin and such, and ride the wave. So at this point, I'm thinking the worst of it probably comes after the election, right? So if it's going to happen, I think they're going to keep kicking the can down the road this year. We all know what happens after the pivot. That's when you get your 30-40% correction on stocks, and everything really goes haywire. And so I just, my case is that people are expecting a pivot much too early, and then maybe we don't see that till late summer, fall, or even into the winter.
Yeah, and I think that brings up a good point is, and Mike, you mentioned this too, is we got these CPI numbers this morning, which pretty much across the board, they were slightly hotter than expected. And all of a sudden we see a market that, we're seeing interest rates, the 10-year inching up a little bit. People are relatively, stock market's not down much, a little bit, if much, but does this change the narrative from deflation at all, or is it just prolonging it? Is there a chance that we could see, is it possible that the lows in this cycle are 3% on inflation, and that, if the Fed starts cutting aggressively, we could shoot higher, or you're still all in on deflation?
That's very unlikely. I'm all in on severe deflation. And that's what's happening in commodities already. And remember, what deflation is when you get to too high of a base and you revert. The biggest and most significant example in the history of U.S. is the 1930s. We just got too expensive. And here I'm just showing you the Fed funds futures. Despite this weaker than expected, or the stronger than expected PPI, Fed fund futures are actually they're actually declining. If you go out to like January of next year, 380 versus a current 533%. So still pricing for more ease. But the macro for deflation to me is severe and negative. And part of that, as I point out, what's happening in China. We already have deflation in China. PPI is negative in China. And China was the biggest engine of growth on a global scale. Well, Ponzi scheme type, maybe potentially. I shouldn't say that, not Ponzi scheme, but similar to Japan when it peaked. And then let's just look at the macro of, we had the biggest pump in liquidity ever, the highest inflation in most of our lifetimes, and it's just starting to tilt backwards. But is back downward. It's a mean reversion. But what you said about potentially inflation picking up and the Fed easing soon, that's not going to happen. Even in an election. Chairman Powell's warned us they wouldn't do it. He keeps pointing out that's what some of the mistakes of past, like Arthur Burns, made. Maybe that's what they've said. That's what's changed in my lifetime, when the Fed was able to ease and kind of ease with the ease they have in the past and not get the inflation. They will not do that until the whites of the eyes of, and that's why I see things like this is the stock market needs to go down.
Yeah, I don't think they're pivoting for a while, Mike.
Yeah, there's no reason to.
Yeah, I think that predictive markets on the pivot have been wrong literally this entire cycle, and horribly wrong. We were supposed to have had 4 cuts by the end of 2023, right?
But that's the shocker today. That's the shocker. I think, don't interrupt, but look, why we had the numbers not worse, and yet they're pricing for more ease despite that number. So the market's still tempting the Fed. It's kind of impressive. It's shocking at the moment that the market is pricing for that much ease. Yet, like you said, we don't think we're pivoting.
Yeah, and really, what are they still pricing in March as the first cut, right? So that's 2 meetings from now.
Even the Fed governors now are saying, I don't expect. They're already sort of jawboning about maybe May. I think that just keeps getting kicked down the road because nothing's broken. I think to Mike's point, why would they pivot right now if jobs seem fine and inflation seems fine and stocks are up? There's just no reason for it.
So either they don't ease or something makes them ease. And just FYI, so right now the market's about 70%. That this is a futures market's tempting the Fed. 70% they're going to cut in March, and 100% they're going to cut in May.
So one question, just going back to this inflation versus deflation kind of thought process, I'm having a hard time understanding. I mean, I understand commodities have come down. I understand oil. If the U.S. enters a recession with where China is, you could see oil sub $50 very, very quickly, which is deflationary. But, when you look at the M2 money supply, right, when you look at the runoff of the Fed balance sheet, how little they've run off, how much money is still in the system, is it possible that even with copper falling and all these other commodities, is that you could still have inflationary pressures, or not really?
Oh, we're getting them. You see the inflationary pressures. Inflation's sticky at 3%. That's the key thing. It's sticky, which is here. Let's just look at that M2 too. Now you're looking at it. You see it's look at the year over year. Now this is a lot of people watch this index, but it was negative. What's the latest on M2? It's still minus 3%. So I mean that's deflationary, and we've never really had that. And let's just do this really quick. We'll do a max and see how far our data goes back. I think it's 1960. Yeah,
Well, minus
1960.
3%, but how much did it go up during COVID, right? I mean,
There you go.
Yeah.
Up 25%. But that's my point.
Right.
It's the number one thing I've seen a lot of people miss in markets is never forget from where you came or where you're from. And that's where deflation comes from. We pump too much, we pump too high. There was a good reason. This peak was 20. Remember, there was a lot of suspicion. A lot of us almost, well, we're going to die. Okay, pump it up. But now we're in the reversion downward. And I can just mention the latest book I'm reading is called The Price of Time. And it's all about the lessons of too much liquidity, pumps in the assets and in markets plunging afterwards. We're in that process right now. I think that we're just getting that little reprieve in the stock market. Maybe we'll be lucky by the end of this year. It'll stay strong. But to me, the risk is gradually then suddenly we tilt towards that deflation.
Gotcha. All right. Wow. So, Scott, I saw you had a chart up there. Did you want to show that and explain, or did you?
I do, because it's pretty wild, right? And I think there are some people who have been expecting Ethereum, which was massively lagging, to finally catch a bid. I did not necessarily expect it to catch a bid the second that the Bitcoin spot ETF was approved. And if you actually dig in, so first of all, this is the weekly chart. I've been writing newsletters about it for 3 or 4 months. I've been literally sharing this. It's only been oversold on the weekly and RSI 4 times. All of those were bottoms. I pointed out there. This time we have bullish divergence, meaning higher low on RSI, a lower low on price right there, and the key support that was left on this Bitcoin pair. Now, why am I watching the ETH Bitcoin pair? It doesn't mean I'm selling Bitcoin into ETH. This is how you have sort of a bellwether for what's going to happen with the altcoin market if you want to be in Bitcoin or if you want to be trading something that you think can outperform it. I've thought that ETH was bottoming here. There's been tons of fundamental FUD. People saying it's too slow, too fast, it's dead, Solana narrative, all the things that I absolutely love to hear that make me want to buy something. And if you take a look, this is the weekly. You now have a bullish engulfing candle. We'll see if it lasts. RSI breaking out, a lot of reasons. But let's dig into the hourly, because this is where it's really, really interesting. This was the dead bottom. Now, this was the fake tweet right here by the SEC that you all saw. The SEC had a hack, fake that the ETFs have been approved. The second it happened, Ethereum had the biggest volume candle that it's had in years. There's a bigger one here now, and pumped up and has not fallen since. So Ethereum has been beating Bitcoin the entire time. Obviously, this is not like new retail coming in or new money. This is crypto degenerate traders looking for the next narrative. And the minute that they saw a Bitcoin spot ETF approved, they went into ETH thinking the next trade, the next narrative for the next 6 to 9 months will be the Ethereum spot ETF that is likely coming. I liked it before that. I really, really, really love it now. The whole ecosystem around Ethereum is now booming in the last few days. I just think it's absolutely hilarious, to be quite honest. You think about this, Gary Gensler very begrudgingly approves a Bitcoin spot ETF, says he only did it because of the courts. And what does the market do? It pumps all of the unregistered securities that he hates so much.
Let me piggyback on Ethereum a little bit. It's something that I saw in the Bloomberg crypto chat today. Is thing that Ethereum has that Bitcoin doesn't, and that's what and most people would call earnings. And that's the key thing that I've noticed since I've been in the business and trying to market commodities and gold to typical traditional RIAs, which in most of these investment managers are very equity focused, is Ethereum does push off a dividend and get a return. I basically can call it earnings. Bitcoin doesn't. Bitcoin's just like gold, digital gold. And that's the key thing most of these people will say is that, yeah, great, but your typical money manager don't give a damn about gold. They just don't, and they haven't. They're a very small portion of portfolios. Now, equities are the vast majority. Even to get exposure to commodities, they'll use equities. So Ethereum might have that benefit that I think most of these very in the space crypto Bitcoin people, I'm showing PPI there, very in the trenches Bitcoin people are missing about this product. It's just like gold, and gold is not a large portion of virtually any portfolios on the planet.
Wow. All right. So I want to pivot to the Nikkei, right? So one of the things I've been seeing, Nikkei is hitting 33-year highs on the charts, and I can flip up my Nikkei chart here. Amazing. I mean, I feel like in the U.S. we're very spoiled. We, every 2 years, even after a bear market, we hit a new all-time high within a year or in a year and a half. And here, the Nikkei made a high in 1990 and still has not taken out that high. Imagine being a buyer that bought there and you've been waiting that long.
I was
Uh,
there.
yeah, there you go. There you
Seriously,
go.
I
Mike, you talk.
worked
Mike, you
for
talk
Industrial
about
Bank of
how long
Japan.
it. Yeah, go ahead.
I worked for Industrial Bank of Japan in the early 90s. I remember running around the Imperial Palace in Tokyo. I had hair then, and it was valued at a greater value than the state of Arizona. Now this is right kind of after it. I was in the early 90s. It peaked as June 89, but that's the case. Same thing. I don't want to interrupt, but I can get in details later. I'm also reading book. What you see in that peak is actually almost more extreme in China just a few years ago.
Wow.
And
So
Mike, you talk about literally all the time, once a market really tops, how long it can take to return to those highs. You've showed this is not just a Nikkei thing, maybe 1990 to now is, but in the United States, in our stock market, 13 years, that's nothing, right?
There you go. I'm glad you pulled up NASDAQ, and if you pull up like Euro stocks and stuff, that's the key thing is, that's what then. First of all, you have NASDAQ, that's great, but if you look at U.S. equities versus the rest of the world, the most expensive ever. Yeah, so I'm only showing that because this is what's happening in China. So it's a book I've been reading lately, The Price of Time, pointing out that when the Chinese stock market peaked in 2007, it was 2 times GDP. Total market cap, and the property market total value of real estate was about 4 times GDP when it peaked in 2016. That's almost exactly the same as what happened in Japan. So to me, this is what's going to matter by the end of this year. This is what people are going to realize is happening, and it's a paradigm shift on a global basis that's going to affect the whole planet. So I like to point out is the U.S. is the shining star. Bitcoin kind of is in between that, but when you take away wealth, you want risk-off assets and things like treasuries and things, and this is just getting started. Hopefully we can get through this year. We'll find maybe the election will matter, but then we have these wars going on, and I like to point out, and I pointed here what's happened. These things are epic and historic. Russia invaded Ukraine. This is when the stock market peaked, and we started taking out. We just stopped importing everything we can more from Mexico than China. President Trump starts imposing tariffs, and everything started tilted over. And this all got started when China joined the WTO. I'm talking about the significant macroeconomic reversion on a global scale that's really kicking in this year that we've never seen. And China and Japan's the most recent example. Okay, that's macro, but very big.
So speaking, you brought up China, right? So in the US, when the Fed, so right now China's in a tough spot economically, like really bad, but they are stimulating, right? They are printing massive amounts of money. US wise, that was the best buying opportunity you could have asked in 2009, right? Is there a buying opportunity in China right now? Will you have Taiwan elections coming this weekend? Is there too much risk? Do you think the Chinese markets are headed lower? This is the Hang Seng stock market right here that I have up, and it's down significantly, just in the last year or so.
Yeah, I look at it as I mentioned this the other day to the person I knew who bought GBTC. He pointed Alibaba looked attractive to him. That's not me. I don't know. I don't watch that stuff. But I just keep looking at the CS. You look at the Hang Seng, but or the what is this? The CSI 300. Whatever it is. Let's just pull that one. CSH 300. CSI 300. It's it peaked in that's in 2007, but that's the point is it's a good leading indicator. We should get bounces. We should get have to get government stimulus, but they are maxed out from what I've read. This peak here, they're maxed out from my head, and this is like what you showed in Nikkei. That peak, it's only been so we're 13 years. Well, how about another look at the Nikkei? It's been 30?
30, yeah. Yeah, incredible. All right, so let's kind of turn our attention. So we have Bitcoin spot ETF. Kind of, I don't know, Scott, if you were as sick of as I was of hearing about it. It just was like, it got to that point of just being ridiculous, man. Yeah. The halving is coming up for Bitcoin. Is that the next narrative that drives it up, or do you think we have a bigger dip first?
I mean, usually we get that 30% ish, dip in advance of the halving or right into it. Arthur Hayes, everybody knows, the former CEO of BitMEX, who everybody loves. He says he's going to short this market in March. Thinks we get that 30% vicious washout. Because remember, a 30% dip on Bitcoin is like a 50 or 60% dip on all coins, right? Minimum. And then we go into the bull run of the halving. You do have to remember, like, we are going to see increased demand from this Bitcoin spot ETF. Even if it underwhelms, it is going to be increased demand because people who buy shares of these, they're going to have to buy a Bitcoin underlying. And that's going to run right into this sort of supply reduction of the halving. So I do think that mathematically, if you're a betting man, you have to take this shot that this is going to continue to go up. I wanted to ask Mike about this. Mike, you've been saying since day one GBTC was going to be the trade. It was, right? The 50% premium. Now we've pivoted to this ETH narrative. Maybe we missed it already. This is ETH, right? Which is the Grayscale Ethereum trust product. It's only 11.48%. This was at minus 59.64% a year ago, right? But even just in June, it was minus 55.9. Maybe we missed it. But you have the roadmap of GBTC trading on ETF hype. Is this the same, or is Ethereum far less likely to get approved, so it's not?
It's a matter of time. I mean, we launched the Bloomberg Galaxy Crypto Index in 2018, and the primary focus was, okay, if you finally go from the SEC, if your primary goal is to protect investors, a lot of people get involved in an index. I mean, at least in an index, you can only lose so much, not just one single ETF that tracks a single product. Like in commodities, you track indices, in stocks, you track indices. But that, to me, that's the key thing to think about. If it's at a discount, I haven't really looked at it lately, and if you're looking to get into space and get involved, buying that on dips might have some attractive value versus just regular ETH and some other products. Because look how GBTC worked out. It gave you such better risk reward. It had to fail. The whole system had to fail, and trade's done. Thank you very much. And might be more of it, but I like that narrative. So if you're looking to get involved in the space, I suspect that might find responsive buyers on dips, that product.
I agree.
Interesting. All right. So Mike, going back to gold, I obviously own a fair amount of gold myself. Is the breakout coming this year, this first quarter, second quarter? When do gold players actually reap the rewards that we've been waiting for a long time?
It's going to take gold. It's obviously doing it already, but it's actually doing it, Gareth, with very poor negative ETF inflows. Those will flip, I think, when there's not an alternative, meaning, okay, darn, what you showed me in the in Nikkei finally giving up the U.S. stock market, when you have to have investors finally say, well, why should I bother with gold? And this is what I've heard this for decades, or at least years, when I can get better returns in the stock market, or now I'm getting 5% in the T-bill. That's going to flip, and that to me is going to take that stock market to start going down in a normal recession. That to me is when gold accelerates. Now, despite that, you have already taken off. Why? Bottom line is, don't mess with the deepest pockets on the planet. Central banks have been buying gold. Now think about these. Some of these central banks, Russia and China, usual suspects, can print paper money and buy this asset in the midst of a world that's having all these wars. Is that going to go away? I suspect it's going to continue. Now Bitcoin's in that space. So the way I like to describe gold, we really can't hold that gold anymore without some Bitcoin in there. But you see what's happening. So I look at this year, by the end of this year, gold might be one of the best performing assets. Now in commodities, it was last year. It blew almost everything away, any major commodity. And what stops that? It's that tilt towards recession. And it's just the bottom line, the competition. T-bills at 5%, stock market resilient. Once that starts flipping a little bit, then you have a good case for gold. The key thing I like to point out, if I have a chance, I'll pull it up a little bit. I guess we don't have much more time. Is you look at volatility on the VIX, and you take the VIX, divide by, and just subtract out the T-bill rate. That is almost the lowest it's been in almost 20 years. That's a good sign for gold, meaning because volatility can only go up and rates can only go down, typically from these levels, which is very good for gold. Typically.
Gotcha. All right. Well, Scott, I'm going to ask you, what's some final words for people out there as we come to the end of this?
I mean, I really, listen, I have done nothing but eat, sleep, dream, and drink ETF for the last week. Like I said, I didn't even look at my TLT trade for a week. Literally have been all consumed. I'm glad that's passing, but I really do believe that if we do get that washout we kind of talked about that Arthur's predicting, that is a really good time to buy this asset long term. I think it's always a good time to buy this asset long term, to be quite frank. But I think at least this is going to be a year where we see crypto trend to the upside. If we do get that big recession in 2025, well, that's going to line up right with the year in the 4-year cycle when things are supposed to be very good. So it'll be for crypto. So it'll be very interesting. But right now, like I said, bears need to prove it to me. I'm going to ride this and trail up the stops and just see what happens, I think, and make the market prove it to me.
Awesome, buddy. All right, well, let's end it there for this Market Mavericks session here. Thank you guys for watching. Thank you, Scott and Mike, for joining, and we'll see you guys all next week. Take care.